Hello traders, Jason here with SwingHigh.com. It is Tuesday, January 26th, 2010, and this is your post-market analysis. Well, we had a very interesting day in the markets today. Many of the indexes were up as much as 0.5%, if not more, and all of them pulled back and finished in the red. So that is an interesting day. We'll take a look here in a second. The Dow down about 0.1%, the Nasdaq down about 0.1%, the S&P down 0.5%, the Russell is down almost a full percent, and the financials down 1.75%. So the Russells and financials showed some real relative weakness today, which is very bearish to see. Let's take a look here at the intraday action on SPY. As you can see, this is the 15-minute chart up here. We gapped down this morning, and we gapped pretty much into this support area at 109. And from there, we shot north, filled the gap, and then some, which is very bullish. And after such a move, you would expect us to make a higher swing low, which after finding resistance at 110, we did. We pulled back and made a higher swing low, broke through 110, ran up here to the 200 period moving average on the 15-minute chart. It's not that significant, but that is an area that we seemed to have found resistance at. Made a double top. That double top was confirmed here, and then came down and tested 110 again. It acted as support. We bounced a little bit, found resistance, excuse me, here at the confirmation line of the double top, which is expected. Then, after that resistance, turned around and broke down through 110 and finished the day pretty much at the same price as the open, a little lower. So it looked like we were going to have a small bounce here, but then we pulled back and had a late day sell-off on some good volume, which is interesting to see. Now, after hours, you're seeing this candle here jump up and down. That's because earnings reports are coming out. We'll have to see tomorrow what happens with them, but right now the markets are reacting to looks like some positive earnings. Let's look at the daily chart of the S&P. We have the rising wedge again, as always, this breakdown, and now we are continuing to make this low base, or even a descending triangle, if you will. This part is slanted down, and we have a flat area here. Now, it's important to note that while things look bearish right now, we are sitting at support here at 109, which was held nicely by the bulls today. It's not a major support area, but I would not be surprised if we bounce here or if we hold up for a little bit. For the bears, it was nice to see us staying below 110, but we do have major support coming up here at 108. I would love to see a break of 108, because after that we have 105 to test, which is going to be somewhat significant, and from there all the way down here at the 100 area. Of course, we have 103.60 and 102, excuse me, on the way down. Let's not worry about those until we break 108 though. So that is a bearish formation. We are starting to make a low base, which is not surprising after a run down. I would like to see this consolidate a couple more days, maybe till the end of the week, and then continue to the downside from there. So we'll see if that happens and play it as we see it. Let's look at the market internals. The VIX dropped 3.5%, give or take. Nice pullback and slight double bottom, which corroborated the move nicely today. At the end of the day, we didn't get as much of a pop as I would have liked to see, though. The TRIN was in bullish territory and drifted bearish as the day went on. The TRIN Q stayed bullish all day. The TIC was predominantly bullish, finished bearish, and the TIC Q, same thing. I don't have any more time to talk about this, but check your Bloomberg economic report or your economic calendar, because the FOMC meeting at 2:15 and new home sales could definitely move the markets tomorrow. Thanks for being a part of SwingHigh.com.